All right, ladies and gentlemen, let's move forward with tonight's class. Today we're going to have a general introduction to using the Stockpair platform, plus I'm going to take you around and show you where you can find the information you need in the internet to become a good trader. Most of the information you need to help you analyze and decide what to trade is available and easily accessible and free in the internet if you just kind of know where to go look. So tonight we're going to go look for economics counters, charts. We're going to go see where you can go find technical information, where you can go find news, and then we're going to talk about some brief strategies. And before we do all that, we're going to take a quick test tour around the Stockpair platform. So if you give me 1 second, I'm going to bring you up to the live Stockpair platform, and we'll take a look at exactly how you use and how to make trades on the platform. So give me a second till it gets popped up on your screen here. Okay, so what we're looking at, as soon as it pops up there, we are looking at the basic Stockpair platform. It's a very simple platform. It makes trading very, very easy. It keeps your decisions down to just 4 choices, but they're easy to find and easy to track down. It's not, some binary options platforms offer so many choices and so many different kinds of, and they have them all over the place that you can get lost. Here, Stockpair has put it in a very concise, easy-to-follow manner. This is the simple trading floor you're looking at. Okay, on the left-hand side, we'll give you the assets that are available to be traded at the moment. Now, remember, when you're trading on the Stockpair platform, you are trading in live global markets. So not all assets are available all the time. So like right now, USA markets are open, so you can trade those stocks that are available on the U.S. market. You can't trade those stocks when the U.S. market is closed because all the data on the site comes from live feeds from the global exchanges. You can also trade, if you click here, you can see what indices are open at this moment. So we have NASDAQ, Dow Jones, and S&P because the U.S. markets are open. European markets and Asian markets are now closed. Okay. So we can see the currencies that are open at the moment, and there's a scroll down bar because there's a sizable list. Currencies basically trade 24 hours a day, 5 days a week. The stocks and the commodities trade, we can see down here. Right now, there's gold, oil, and silver, but they're not open to be traded. They closed earlier in the U.S. today. Every day they close earlier, so they're not available to be traded at the moment. So what we have now are U.S. stocks, U.S. indices, and currencies. And we can see them simply here, very easy to trade. You see the live button letting you know that they're available to be traded, and you can see what's available. Okay. Now, let's pick an asset. So let's take the Canadian dollar. It's doing quite well today. It's picked up some momentum against the U.S. dollar. It's trading at the 109 level, where it's better than where it's been for the last month. Okay. So we can see it's trading at 109.850. When we just simply click on it, it grays up the button. Let me show. We put some markers on here. Okay. So it shows us we're trading the Canadian dollar. Across the top of the screen, it asks you right now, will the Canadian dollar go up or down? Okay. Now, what it's telling us is you can't enter a trade right this second because it's approaching the expiry, which is true, but our expiries are up here. Now, to see all the choices, now lots of sites have them broken down. They have 60-second over here, long-term trades over here, next expiries over here, and it just gets confusing. You know kind of what you want to do already. So we use the drop-down menu here, and we can see in the next 60 seconds, 90 seconds, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 60 minutes, by the end of the day, the end of the week, 2 weeks from now, a month from now, 2 months from now, 90 days from now, 150 days from now. Now, you're asking me, why would you ever do those things? Well, let's take a look. Actually, the perfect example for a long-term trade today is going to be the euro. The euro skyrocketed today after Mr. Draghi and the ECB held rates and policy when they were expecting to maybe do some liquidity or to go to negative interest rate, and he topped up the euro. That means he was very confident about the eurozone recovery. The euro surged way above 137. Now it's climbed to 137.574. That's way, 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 way too high for the euro. Now tomorrow we have the non-farm payroll report in the U.S., which will weigh, we don't know which way it's going to come out, but it's probably going to come out under forecast because the U.S. has been under snow for 2 months now. I mean, really bad snow. And so people just haven't been hiring only because they have the positions open, but nobody's been able to get to work and nobody's been able to come in for interviews. So what we say is this euro is overstated. So we can say we want it to come down 30 days from now. So we're going to take in the next 30 days, and we're going to say the euro is going to go down. Okay? And it will expire on April the 4th, 2014 at 2300. Okay? And we can lock that in. Now, once we decide what we want, we're going to click on, so we picked up the expiry. We picked the asset first. We picked the expiry. We picked the direction which we say it's going to do. It opens up our actual trade screen on the right-hand side. And we can say we're going to trade $600. Okay? And we are going to buy that trade. Okay? It's going to pay us back $1,074 when we're in the money. And we're going to click on buy. We grab that position. It's going to take that. We can actually look at it closer, or we can just continue trading. And it puts that position in our open trade window right here. Now, that's for a long-term trade. There's very rare circumstances that you're going to get something like that, but sometimes when an asset skyrockets up or down, like last week when we had the whole mess with the Ukraine and Russia, crude oil surged all the way up to $105. It's down to just about $100 now, but you could have grabbed that on Monday afternoon when it was up like $5 on Monday, and to close a month from now, because you knew this stuff with Russia wasn't going to go to war, and it would eventually peter out, or you could have just taken it to trade the end of the week. I took several of them to close at the end of the week, and you can actually see on my trading platform right here, my open positions. You can see here I took oil. Okay, here I took oil, and here I took oil. Both of them are in the money at the moment. So I took oil to close on April the 2nd and oil to close on May the 2nd. Okay, both way out trades that I grabbed oil at over $105. So I'm in the money. Oil's not going to go back up that, especially one of the reasons I grabbed is even if the Russian conflict and Ukraine conflict had gone on, once winter passes, the demand for crude oil is down through the spring. So we knew it was going to either come down a couple of dollars anyway. So remember, when you're trading binary options, you don't care how far up or down an asset goes. You're only concerned that it goes in the direction in which you say it's going to go. So these were some great reasons to pick these longer-term trades. Now, most of the trades in binary options are done in what's called the now, which is the next expiry. Let me just get rid of my markers here, and I'll show you. Okay, the next expiry is usually 1/2 hour from now. But you can pick 5 minutes, 10 minutes, or 15 minutes. But all of these are where the expiry is. But 30 minutes is about where almost all the trades take place. Okay. And so, again, you simply pick the asset from, you look at the live button, you can pick currencies. Let's take U.S. stocks. So we see the live button. We see it in green right here. Let me show you that again. We can see where it says live because that tells us what they're active. We can trade that at the moment. So we will then open this window by clicking on the little arrow button. And I don't trade stocks, so I don't know that much about them. But let's take, just for reasons today, for examples, we're going to take Amazon. I like Amazon. I like shopping on Amazon. It changes the window. It says, will Amazon go up or down in the next 30 minutes? Amazon's trading right now at 372.157. We can see most of the day it's traded fairly flat, but it did dip down. So it's actually above its price at this point, but I'm not doing any analysis now. So let's say we think it's going to go down. I'm not going to invest much money here because I don't know anything about this asset. And we say in the next, just take in the next 10 minutes so it can go on while this webinar is happening. And we say it can go down. I click on that. I open the position. And I'm going to continue trading. This is how simple it is. You have everything built in this one screen. So you have 60-second trading. You have short-term trading. You have long-term trading. All of it is right here in this window. You just simply pick when you want your trade to close. Now, tell me, how hard do you think it is to determine if an asset's going to go up or down in the next 5 minutes? Now, 60-second trading is really complicated. All the assets are ticking up and down, ticking up and down, ticking up and down. But you know over 15 or 20 minutes, it's going to take a path in one way or another. Now, some of the best ways to trade binary options are using economic events. Today, if you would have just watched the euro, and the minute Mr. Draghi opened his mouth, well, first of all, at 1:30 they released their decision not to reduce interest rates. The euro jumped up right then and there, and it stayed up for the rest. It's still up. It's still 160 points higher than it was. Then when Mr. Draghi came out and did his press conference, the euro went sky high. Okay, how hard is it to trade that? I mean, the man's talking, he's not reducing interest rates, he's not doing any monetary stimulus, and he's saying the Eurozone is recovering well. What can you do? You know the Euro is going to go up. We don't know how long it's going to stay up that high, but we know it's going to go up at that moment. So we could take, while he's talking in the middle of his half-hour presentation and he's pushing the Euro up, we can keep taking trades every 10 minutes while he's talking for it to keep going up. Very easy trading strategy. There's lots of easy strategies you can apply to trading binary options. Now, the other choice you have when you're trading with stock pairs is trading pairs. Now, pairs match two similar stocks, okay? And it's only stocks that are offered, and it matches them together, and you can trade them against each other. So in other words, you don't have to worry about what's happening in the rest of the markets, what's happening in the rest of the world. All you have to be concerned with are those two assets. And you can trade them to close today, this week, or the end of this month. Okay. Now, for instance, we know that Facebook, we know Mark Zuckerberg is going to come out and make a speech today. Or we know Facebook is going to release their earnings. Or we see the headlines in today's early morning papers, and Facebook is buying up another company. Well, we think it's going to push Facebook up, but we don't know how the markets can do. But we know Facebook, if it goes up, Google usually goes down because it takes a little bit of its market share from it at that moment. And so we just know against the two that Facebook is going to go up. Okay, so we can then take it for the close at the end of the day to go up or down. Okay, now it's a very, very easy trade to make. Now, unfortunately, because we're just about approaching the end of the day in the U.S., the expiry for this is closing, so we can't actually get in. You can see here's the start of the trade, here's the end of the expiry, and we're now down to the point we actually can't trade this any longer. It's too late in the evening, or too late in the trading day, because again, you can only trade stocks when the markets are open. Okay. So it's just closing down, but otherwise you can trade the two, and you can see on the chart, you can see right now how Google is doing as compared to Facebook. So we can see that Facebook has steadily come down today. Not by much, but it has come down where Google has stayed up. So if you would have said Google would win, okay, see, if it says right here, Google, and underneath it says, if Google wins, okay, over here it says Facebook wins. So you're just picking, this is not up and down, but you're just picking Google or Facebook. You're saying which is going to do better than the other today. That's all that you have to decide. It's a very, very easy trade. You have floating and you have fixed. Okay, fixed are based on set prices. Okay, now, if we take this to go in the next 10 minutes, okay, we can, it's based on, is the price, floating is based on the open and then the close at the end of the period, where fixed is based on the minute you open the trade, where it is. So one is a relationship to where it's trading all day. The other's relationship is where it is trading now to the end of the day. So you can see now, if we open this now, and we say in the next 10 minutes we think Google's going to do better than Facebook. We click right here. We're going to invest $200. We click on there, and it's going to be from this point forward. So we have now Google doing better than Facebook. We can see in our portfolio that is open up here at the bottom of our window. We see all of our open trades here at the bottom of our window. If you want to see all your other trades, you can go up here to the button that says My Account. And you can see here all of your open trades. You can see your portfolio, your trade history, your current statement, any bonus money you have. Okay, you can actually print it out in an Excel spreadsheet by clicking on the Excel button. You can define this by putting in the periods you want to see. It gives you lots of trade, and you can go back and see the entire trade. So you can open up the window and see how that trade went. Okay, when you had that trade with that position in. Okay, so it gives you all of the stuff you need to see. All history, all current accounts are all available through your portfolio. If you want to see your trading history, you can come here. Your statement of your account, you can come right here. This shows you everything and where you are and how you account for your balance. Okay. Now, if you want to make a deposit, you just go down here and drop down deposit. Now, trading indicators, we offer a form of signals that will help you trade better, and you can see them right here. These are 1-hour signals, 4-hour, and 24-hour signals. The 1-hour signals tell you where that asset is expected to go in the next 1 hour, and by reading the temperature gauge, it tells you how strong that asset is likely to go in that position. So you can see down here, silver is slightly in the red. It's going to go in a call. It's too cold to trade or take anything on. You don't want to look at anything to make a position until it's in the green. And you need green, as you can see, as it gets darker green and fills up the bars, it's got stronger momentum. So you have a very good chance that the Japanese yen is going to go up in the next 1 hour. You can see 4-hour windows here, and then 24-hour here. Okay. And these will help you do not ever trade only on signals. Use these as a source of information when you're trading. Let's go back over and I'll show you something else that you can use for a strong indication of hydrogen. Let's pull up the Euro US dollar. Down here you have a sentiment bar. Let me circle it for you. This will also help you make a decision. Okay. This tells you all the other traders trading on the platform that are trading this asset, in which direction they are trading. So right now in the Euro US dollar, 56% of the trades say it's going to come down, and 44% of the traders say it's going to go up. And these aren't people, this isn't social media. This is actual trades that have been placed on the platform. We can see that it's holding pretty tight here at 138.65. I say it's going to come down, but it's not going to come down for, it may come down after the non-farms payroll report tomorrow if the U.S. data is strong. Otherwise, we'll probably see it hold until Monday or Tuesday, and when the traders get tired of Mr. Draghi's sweet-talking the markets, it'll move on. But if you combine the sentiment bar, some economic data, and also some the signals, they will help you make better decisions. Okay, so it's something that will help make you make better choices. Okay, if you click on the technical indicator bar here, right above the trade, you can pull up all the technical information you want in a technical chart. Okay, so what we see in here is Bollinger Bands, and we have a whole class on Bollinger Bands, and I'll teach you in class how to read Bollinger Bands and trade from. Bollinger Bands is a great trading system for binary options, and I've developed a strategy for applying this to binary options, and we'll teach you this in class, and it's very, very good. And this actually had a great buy signal right here where it had the convergence and divergence that broke out. Okay, this is probably exactly when Mr. Draghi was speaking also, but it gave a very, very clear buy signal. This, and you can set this count. You can see the end of the day, not the end of it, but you can see a daily chart, a weekly chart, or a monthly chart. Okay, so we go back to trading floor by going up here and clicking right back to it. These are all the things that are available to you as a trader on the Stockpair platform. Okay. It is a basic, simple platform. As elegant as its simplicity. Okay. Now, in order to make good, solid decisions, you need to get some other information. Okay. And you need to get that, because I'm spouting off about all this stuff, because I live in this stuff 12 hours a day. I mean, I start in the morning. We now have a new market review on the site. If you go up here and click the button that says Market Review, it's going to take you up to our live blog, and this is our daily trading insights. And I start writing this at 5 in the morning, and this is this morning's, and you can see each day I'm posting up the new daily insights and trying to keep you up to breast with something that's happening in the markets or something that you kind of should watch about. This morning I did this whole analysis of what to expect from the ECB and what we could expect to might happen or what might not happen. Okay. And like I said, today traders should keep an eye on the charts to see if there's a clear trend ahead of the ECB. If so, it would be great a trading opportunity. And regards to the outcome, it'll always be advisable to wait until Mr. Draghi's press conference. That is usually where the action is. Watch for some volatility as he enters the question and answer period. That's exactly what happened today. Okay. So I'm going to give you this. This is posted at 5:30 in the morning every morning. And then I trade in the markets all day long. So, but you need to be able to see the same data or get the same decisions I'm getting. Because 5:30 in the morning doesn't help you at 9 o'clock later in the morning, because all of this stuff is outdated at that point. So the first thing you need to do as a beginning trader is you need to start gathering things that will help you. And one of the places, the first things I tell traders to do is to find where to get their news. Okay. Now, I recommend marketwatch.com. Not because, now this is one of the Wall Street Journal papers, not because I have any ties to it. It's free. There's nothing you have to log in for. There's nothing you have to sign up for. Okay. They have one of the best, what they call news viewers in the world. To me, it's like an old-fashioned ticker tape. When I started trading 40 years ago, that's what all you had was a ticker tape. And unless you were working for a big investment house, you didn't have access to those. But what they do is on their news viewer here, if you go up the line that says news viewer and click on it, it's going to open up a news viewer screen. And what this is doing is minute by minute feeding you out all the headlines of all the global markets. Now, what I like what they do here is, see here at 229, let me just circle. I'm just giving you this as an example. At 229, it says gold tops 1350, traders look at Fed, ECB policy. Okay. Then above that, oil turns up in volatile trade before NYMEX closes. Oil up 13 cents at 101.57. April oil 11 cents to settle at 101.56. You notice these are all exactly as the markets close, and they're in black. What happens is, as the events happen, not as they write a story, not as they've analyzed, as it happened up to the second, they are giving you the headline, the data, like a ticker tape. Then as they get a chance to write the story, they put it in blue, and that tells you there's a corresponding story that goes with it. Okay, so I'm less concerned about their analysis or what they have to say about it. I'm just concerned with the headlines. Okay. Now, the thing is, there's lots of news sources all over the place. And you're going to go to all these online sources, and you can find lots of them are just repeating printouts from Reuters or from Associated Press. And you just say, I'm wasting my time here. I could have gotten this from the original source before this one rewrote it. Or this one put it out with their title on it. Okay. And they're all giving them credit. They're not stealing it. They have licenses and contracts. But you want fresh news and you need it fast. Okay. Now there's other places that some give you in-depth news, some give you their own viewpoints of news, some give you different types of analysis. Like for instance, when the unemployment rate dropped last month, at the same time, U.S. created virtually no jobs. Some headlines were saying unemployment tumbles. Others were saying U.S. creates no jobs. Well, you need to know all the data. Okay. Then on top of it, it's like I'm watching the Chinese market, the Australian market, the Japanese market, the Korean markets, all in the morning for my Asian reports, and I don't speak any of those languages. So it took me a long time to find a local Chinese paper that was printed in English, that was giving me minute-by-minute news in China as things happen in China. It took a long time to find stuff like there's the Japan Times. Well, they publish at midnight my time, okay, but they're publishing old stories. So when I want to see what's happening in Japanese markets early in the morning, they don't have them. They'll have them the next day. So when I want to know what something's come out, I need to go have these sources. So my first recommendation to anybody is to set up bookmarks for all the assets you would possibly watch or trade. Set up alerts for them. Set up with Google alerts. Google will allow you to set up alerts for just about any type of asset you want to watch. So will MarketWatch.com. And they will send you email headlines as minute something happens. So you can do Google search alerts. So like if you're watching Ford and General Motors, anytime something comes out about Ford, it'll send you an alert. Okay. It's a great way to be able to stay on top of the markets without wasting your time looking for stuff. So setting up your news, knowing the sources of your news, like Reuters is phenomenal, except they have 1,000 different editions. And unless you know exactly where to look and what you get, you can spend 15 minutes trying to track down something or not see it because it's in a different edition. So once you get all of this set up and bookmarked, it makes you a much more efficient, faster trader. And if you notice, when you're trading in markets that are moving very fast and you're trading in 10 or 15-minute time frames, and you need to know what's going on in the markets. So this is one of the places I would recommend, but it's one of the first steps I would recommend to a new trader. From there, we need to go and look at something that's very, very important, and that is called an economics calendar. And again, an economics calendar is available free of charge all over the internet, and it is one of the most important tools that you can use as a trader, because there are so many economic events happening all over the world that you can't possibly keep track of them, and they can affect any trade you're doing. Because if you were watching the euro this morning and you went and saw the euro's down at 137.23, it's been falling steadily, and I think there's a pattern here, so I'm going to trade it going down, and you weren't aware that the ECB was about to make an announcement, or that another piece of important information was about to hit the wires, you could make a trade in the wrong direction, because it could have just been the traders taking position before an event, or it could be something that's driving down, because these events come out all day long, and they're driving up and down, up and down, up and down. Like the pound could have climbed in the morning because, again, we see today the Halifax House Price Index were very strong, which would push up the pound. But if you're trading against the U.S. dollar, 15 minutes later, a piece of U.S. information could have come out. The pound itself could have been strong, but the U.S. dollar could have picked up momentum, pushing down the pound. So you have to be aware of what's happening. I mean, we were looking at the Canadian dollar a little while ago, 109.85, and the Canadian dollar was trading at 111. It's been very, very bad. But all of a sudden today, we got very, very, very strong data, two pieces of data. Okay, we had building permits that came out 8 times higher than expected, and we had the PMI, which is Purchasing Managers Index, come out much higher than expected. So all of a sudden, the Canadian dollar gained momentum, where if you were looking at it, it was looking dead in the water. Okay, so you need to know these things. So let me explain to you what an economics calendar does and how to use one. Okay, they're available from FXEmpireInvesting.com. MarketWatch.com has them. You'll see a lot of places will list them. A lot of people are always talking about the economic events. This is the only place, an economics calendar is where you can find out everything that's happening, but it's free. Okay. When I started trading, you couldn't get this data. Okay. Like I said, we used ticker tapes, and unless you work for a big broker or had a friend at a big broker who was taking the time to call you, you couldn't get this information. You was trading out of newspapers, magazines, sometimes a day or 2 or 3 days later. Didn't have the internet. Once we got the internet, things got a little bit faster, but once we got RSS feeds, data feeds that were coming out to everybody around the world, you're not getting the data as fast as the central banks, the pension funds, the hedge funds managers. So it's made retail trading very competitive, and it puts you in the same, you have the same data that that guy who's trading millions and millions of dollars has. So it gives you a competitive edge, because especially in binary options, we want the markets to start moving in a particular direction, then we'll just jump in for a small segment at a time. Because remember, with binary options, we only have to determine if the asset's going to go in the direction in which we select. We don't care how far it goes in that direction. So you don't have to be at the beginning, and you don't have to be counting pips to hope it gets up past your commissions, because we have no commissions, and all your fees, and then it gets up high enough for you to take some profit. Not with binary options. If you said gold was going to, if you said gold was trading at 1,300, and you said gold was going to go up, as long as gold goes up to 13,00001, you made the same profit as if it did if it went all the way up to 1,500. You're in the money. That's all that counts. So let's go read an economics calendar. All of them are the same. The only difference from one to the next is the graphic designer's graphics, his layout, his concept for the chart. They all kind of have the same calendar, they all have the same columns in the same places doing the same thing. Okay. Now, this is one of the first calendars that put the date across the top instead of the date in the center. So we have the date. Okay. From the date, we go to the time. Now, the time is very important. Every calendar gives you an ability to set the time zone. You always want to make sure your time zone is set in your local time, because you don't want to make the mistake of missing an event because you miscalculated the time zone. So you want to set it so you can see all of these in your local hometown. After that, we have the next slide, and they're almost every calendar is in the same order. We go to currency. Okay. Now, this is the currency or the country that is affected. Now, this calendar happens to, they just redid this calendar, and they've added a lot of stuff to it. They've upgraded their calendar. This calendar gives us a flag for the country, plus it gives us the currency initials. Okay. This is all taking place because the euro, it used to be every country had its own money. Then, since the euro, things have really changed because you need to see the country that's affected by the report as well as the currency that's affected by the report. So when you have Spanish data, you need to know it's for Spain, but it's affecting the euro. So we can go see here. We see the next is the currency, the country, or the what's affected by the release. After that, some of them have impact, some of them have importance, some of them have tier. Okay. It is the level of data. Now, all economics data is divided into 3 levels, and it's the same no matter what calendar you're going to. Tier 1 data is the lowest level data. It's usually leading indicators and regional data that doesn't have a huge effect on the markets. Many data releases have several other reports involved in its total release, and those other reports will make up low level or level 1 data. Level 2 data is important data, okay, but it usually is not strong enough independently to move the markets. Level 3 data is the data that is strong enough to push assets in a particular direction. In this calendar, it's depicted with 3 bullheads, 2 bullheads, or 1 bullhead. Now, I've already done a filter. I'm going to turn off the filter so you can actually see how many events actually happen in one day. So I'm going to put all the events on here, and we're going to put this all up, select all, and we're going to take a look at how many events in the economics market or the economics arena happen today. Well, this is why you have to be aware of what's happening. See, this is why you need to use a calendar. This is all the stuff that came out today. And all this stuff had some effect on the markets. Not big effect, not enough to move the currency, but enough to affect the decisions that were being made by other people to do certain things. So let's go back and turn off the filters and reset it. Okay, and we're only concerned on the whole with Tier 2 and Tier 3 data. So we're back to the original calendar we started with. Now from there we go to the name of the event. Okay. And because you're a beginning trader, you're not going to know what most of these events are. After a while, because these events are repeated month after month, week after week, year after year, and some countries call them something different. So sometimes they're confusing until you get to know them. But like in the UK, unemployment is called claimant count, where in the US it's called unemployment. You'll hear about the non-farm payroll report. Well, does that make any sense to you? Well, that's what the US calls their jobs report. Okay. Then we also have the ADP jobs report. We have there's all kinds of odd things. Today we had in Canada, we had the Ivy PMI. What does that mean? Well, after a while, you'll know what all these mean. But to make it easy, every calendar gives you a detail box. Some of them give you a little box you click on. Some of them give you hyperlinks. Like in this calendar, you just click on the line that you're looking at under the explanation. Now, we're going to use Canadian retail sales at 00300 today, because that is the first level 3 data that we got. Okay, I'm going to open that up, and what it tells me, this is the retail sales month over month. This is a monthly report. Its importance level is 3 heads. It affects the euro, the Australian dollar. The source of report is the Australian Bureau of Statistics. They're the ones who released the data. And if I actually want to see the actual release and read it in detail, I can click here and see the actual release. I can see the previous forecast, and that means last time it was released, or last month, it was 0.7%. I can see the forecast, and we'll talk about what the forecast is in a second, at 0.5%, and I can see the actual at 1.2%. So we got a huge surge in retail sales, much better than what we expected. Now if I scroll down here and read the box, it tells me retail sales measures the change in the total value of inflation-adjusted sales at the retail level. It is the foremost indicator of consumer spending, which accounts for the majority of overall economic activity. Now, if you remember that the economy is all based on confidence. Okay, it's a great big wheel that's spinning around, and it needs all the spokes spinning around that wheel. The biggest spoke is consumer confidence. If consumers are spending, okay, if they're confident, they're spending. If they're spending, people are manufacturing. Retail sales are going up, they're hiring. Manufacturers are manufacturing, shippers are shipping, and the government's collecting taxes, and everything's going around in a circle, and everybody's happy. Consumers are buying houses, they're buying cars, they're buying retail. All that comes down to pushing that wheel around. Okay. So it is one of the most important pieces of data, because no matter if the housing market's going up, the jobs market's doing all right, and manufacturing is doing good, but the consumers aren't spending, you know something is wrong, and that wheel just hits a glut. Every time it comes around to that cycle to that consumer, it just stops. Okay, and it's like, almost a flat tire, and it's just bobbling around. You need that whole wheel functioning, and it all starts with that consumer spending. And so it starts with consumer confidence, consumer spending, to increase jobs, to increase manufacturing, to the whole cycle. Okay. Now, we can also click on charts to see a detailed chart, and this will show us not the economy situation. It's going to show us difference between the actual and the forecast each month. So it gives us some kind of general look sometimes of how accurate the forecast is to the actual data release. Okay. Then we have a history, and we can see the actual results month after month. So it gives us, once we see this, we can kind of see a range of what to expect in how big of a range. Like some reports will go from 50 to 150. Some reports go from 50.1 to 50.2 to 50 and hardly move out of that range. So it gives you some idea of what range it's going to go into. Now, this is the left-hand side of the calendar. Okay. We're going to go over to the right-hand side of the calendar now, and we have the previous. The previous is a known piece of information. It is what this report was at the last release, prior to today's release. Okay. Then we come to forecast. About a week before the data release, there is a forecast. This forecast is a poll or a survey, but it's not a poll of public people, and it's not a poll taken in a shopping mall. It is a poll taken of professionals that are used over and over for the same reports. Okay. They are usually pretty much on the money. Okay. So what happens when the forecast comes out, the markets adjust the price of the Australian dollar. The buyers and sellers kind of adjust to what they're willing to buy or sell it for, based on this forecast. So this is already factored into the markets. So before the data releases, if the data comes out of 0.5, you can expect no response to the market. Okay. If we look carefully at retail sales, we can see it comes within 0.1% of this number. So we could have said to ourselves, if this comes out at 0.5, we're going to have no response. If it comes out at 0.45% or there, we're going to have still no response. If it comes out to 0.55%, we're going to have no response. If it comes out higher than 0.6, it's going to be very good for the Australian dollar. If it comes out 0.4 or lower, it's going to be bad for the Australian dollar. And we can therefore make a set of trading rules that we think this. We've now built what we call market neutral, market positive, and market negative. And we can say if this comes out market positive, it's going to push the Australian dollar. If it comes out market negative, it's going to push the Australian dollar down. If it comes out market neutral, there's no trade. We can then wait for the release of the data and then figure out which one of our scenarios is now holding true. So if we look at this, the Australian dollar at 0030 this morning came out at 1.2%, and that was very market positive. So we would have expected to see the Australian dollar skyrocket. So let's go over and see what happened this morning to the Australian dollar. Okay, so I'm going to bring that up on a chart right now for us. Okay, and let me scroll down a little bit here. Well, look what happened this morning. The Australian dollar skyrocketed right here Okay, all the way straight up, and it's climbed all day steadily. But the Australian dollar skyrocketed at that release. Okay. You could have waited for that release, saw which scenario it came out at, watched to make sure that the other traders, the big professional traders, were doing the same thing that you had thought they would do, and you could have jumped in that market and taken a 15, 20, 30-minute trade in a up direction or a call direction and made a huge amount of profit. It's a simple little thing to trade the economics counter. It's a great way to start trading. And it's a very, very good way for you to trade. Okay? And there are many ways that you can start off as a beginning trader that you don't need much more information. Once you find your news, once you know how to use the economics counter, once you understand how the markets are kind of working together, you can stop and think about things that you already know that are great ways to trade. In other words, if you're working the real estate business somewhere, you're a real estate agent, broker, you work in a mortgage department, you can see that all of a sudden housing prices are going up. You can see that more sales are coming, you have more traffic. Salespeople in your office are much busier. When the housing data comes out, it's going to be good, so therefore it's going to put up your local currency. If you work in an auto dealership, you sell cars, you work in a mechanic shop, you see all of a sudden there's more traffic on the floor, or there's less traffic on the floor. Okay? But you say, hypothetically, you see more traffic on the floor. Well, when you know the auto sales report is going to come out, what do you think is going to happen? Not only will it be good so the U.S. dollar will go up, if it's the U.S. dollar or it's the Japanese auto sales, whatever country you're in when the auto sales are released, it's going to affect those. But at the same time, if the auto sales reports are coming out and they're going to be good, what do you think is going to happen to the Ford shares and General Motors shares that day? Okay, Peugeot shares. Okay, Toyota shares. If overall auto sales are doing well, now it just becomes competition between the big providers, but it means there are at least customers coming in the showroom. If you work in transportation and everybody was getting laid off because there was no deliveries, so retail stores weren't selling, manufacturers weren't making, all of a sudden your trucking company's rehiring all the people laid off. It's got for hire signs in the papers, and they're giving you back overtime. You know what the jobs market's going to be. You know crude oil is going to go up because we're using, or gasoline's going to go up because we're using more. We have more roads. We have more manufacturing. We have more everything. So you can tell from things you know already how things are going to happen. If all of a sudden, your son-in-law who was unemployed, your next-door neighbor who lost a job, all these people are getting their jobs back or finding new jobs, or you see the Sunday newspaper is now packed full of jobs already. You walk past the beauty salon and there's a sign in the window looking for people, and all of a sudden people hire, how the jobs reports can come out. This will affect your current assets. When the reports come out, you will know how these reports should look. You don't care how strong they are. You'll know that they'll be good. So this is ways that you can start looking. Once you start changing your perspectives and looking at how things affect assets and how they affect your trading, you'll be surprised at how much stuff you already know that you've just never put to use in this realm before. So on that note, I'm going to leave you with a lot of things to think about. Hopefully I've shown you some things you can use. Okay. My favorite place to find this stuff is FX Empire, www.fxempire.com or www.investing.com. There's also an excellent calendar available from FX Street and another one from Forex Factory. You can also find lots of stuff through the internet, but the first thing I would recommend is to start setting up your news sources. Find an economics calendar that you're just comfortable with. Find one that has filters you like, that has colors you like, that you're comfortable using. They all do the same thing. Everything's coming by live feeds right to their calendar. Everybody's getting the same feeds. They're not coming from multiple sources. Or they're not doing their own analysis. It's all the same thing. Find a set of charts you like that you can work with. Start looking at the charts. That's the key thing. You don't have to read a chart. You don't have to know how to set up a chart. But start looking at the charts each day. Okay. You'll start to see pictures. You'll start to get a feel of the market. I can actually go in the evening. If I look at the economics calendar in the morning, so I just know what events are due out, and I can come home in the evening and look at all the prices where they're trading and then go look at the charts, I don't ever have to see the reports because I can tell you what happened in those reports and those releases. I can actually look at the movement in the chart from a day and tell you a story. Okay, it's like a roadmap, and after a little bit of time, you'll be able to do the same, and then you'll be making positive, good decisions when you trade. As long as you're making solid decisions, you will eventually start making money. So on that note, I will say goodbye to you all. Now before I do that, you are welcome to go to, on the Stockpair's platform, click on Education, and if you click on our online seminar, we now have a whole program running for you. So we have all kinds of education. Let's see, next week we're doing Bollinger Bands for binary options. Week after, we're doing charting and graphing. We get that channel trading. We also are doing a live trading for the unemployment report and the UK unemployment report and the MPC minutes. We're doing the Federal Reserve minutes. We have lots of classes and courses going on for you over the next several months. So, click on whatever ones you want, register, come to class. I will hopefully turn you into the best trader that you can be. I'll do my best to get you all the knowledge you need. And on that note, I will say goodbye to you all. I wish you a great trading day. Tomorrow is the non-farms payroll report. Like I said, it's probably going to be fairly weak, so we'll see the U.S. dollar go down. We might see gold come up a little. We'll see the euro probably hold its own. But it's probably going to be weak only because of the severe winter weather that the U.S. isn't having. I mean, enough that Janet Yellen mentioned it at her Senate Banking Committee meetings. So we don't expect to be good. The ADP report on Wednesday was fairly weak, and it's a leading indicator before Friday's report. Although unemployment claims tumbled down today, so that was a good thing. So keep an eye out on the non-farms payroll report tomorrow, and it should offer some trading situations. If you watch what's happening an hour before that report, the traders will take position on the dollar and gold. So watch where the euro is going, and you can probably, if you can see a clear path before that report is due to be released, you can make a trade because it's going to continue in that direction till that report is released. Don't be in the markets near the report release time. Look at the markets an hour ahead of time. Get yourself a half-hour trade or a 15-minute trade and get out of the markets before that report's released. It'll be a good way, but make sure it's trending in a particular direction. All right, on that note, I'll say goodnight to everybody, and again, wish you happy trading. Bye now. Thanks for joining us.